What's going on here? Well, it indicates to us that silver and the gold and silver miners are shifting to outperform mode versus the mama metal. Yeah, gold's going to resume strongly, but they're going to outpace us on a percent basis. And I think a lot of that's going to occur between now and year end.
Michael Oliver just went over the latest charts, and what he's seeing could set the stage for gold and silver's next big jump. The signals are there, momentum build, pressure rise. It's the kind of setup you don't see often. In this update, Michael explains exactly what the charts are showing, and why the next move in precious metals could surprise a lot of people. If you own gold or silver, or you're thinking about it, you'll want to hear this. So, let's start the video and listen what he says next.
Now, gold has gone dead sideways for 4 months. In fact, if you rotate active trading contracts, which is the way we plot our gold charts, we use August future up till you're in the last week of August, and it goes in July, and it goes into delivery. Like Friday, we're August 1st, so it's in delivery now. So we rotate to October gold. And you do a continuation chart, look at the April, May, June, and July close. And gold on a monthly closing basis has had 4 months of lateral, almost dead, comatose, sideways closes, month to month, 4 months in a row. In fact, the close yesterday, using the new active October gold, was slightly higher than the prior 3.
Yeah, I've got the spot price.
Prior 4, excuse me. Yeah. So yesterday's close was actually a new high monthly close for gold. So everybody who's panicked about, gold it's topping, it's got to go down 3,000, 2,800, whatever. Okay, you've had your chance. You've sold into it for 4 solid months, now into a 5th. If you haven't made gains yet, you're not going to make them. This is not the way gold tops. And it goes on and on, like for instance, you have a little coil down there below. That was an example of 3 months sideways, and the 4th month said, heck, I'm out of here. Okay? Now you've had 4 months sideways, maybe the 5th month says, hey, I'm out of here. And I suspect you get above your little coil top there, around 34.50, you're going to blow right through the roof. We've got momentum reasons to argue that, not merely price. Now, during that 4 months plus, the gold has gone comatose, happy sideways. Silver has gained, since its April close, as of yesterday's close, the end of the month, 12.9%. Okay? Despite all the sell-offs, silver has gained 12.9% from the April close to the present, as gold's gone lateral. Okay? And the miners have gone up big too since the April close. So, what do you got here? The silver versus. Well, you can see some shelving action even on price. You got one right there. Yeah, raise up a little bit. Yeah, right about there. Go down. Right there. Yeah, go to the high closes in 2021. And 20 up there. Yeah, right there. Those high closes. Drop down to the close. If you go lateral to the left, high close, not high trades. Top of the candle, in other words. Right about there. Look to your left and look what happened in 2011 and 12. You were butting up against what had been an attempted floor. Okay?
Yeah, and now we're back. We're above that now. Yeah. You fought your way above it after 2 years of congesting below it, 3 years. And look at the pullback since. You've had a couple of pullbacks that sat on that low. We're way above that level now. And frankly, we're above everything except the high month back in 2011. Yeah, we're above the congestion zone that preceded the boom, which is down lower. But even price chart is saying, hey, I'm out of here. Why do you keep selling me? I've earned my way. It's not like I've had 10 months up. I've had 1 year of sideways, and now I've had 2 months up out of that zone. I'm hardly old. By our metrics, you're not at least a bit overbought. And yet everybody's still claiming it's got to go down, but it's up 12.9% since the April close, whereas gold went sideways. What's going on here? Well, it indicates to us that silver and the gold and silver miners are shifting to outperform mode versus the mama metal. Yeah, gold's going to resume strongly, but they're going to outpace us on a percent basis. And I think a lot of that's going to occur between now and year end. We've had nice layered drops with sharp rallies. Just had another sharp rally. Well, it's sort of given itself up a bit here. We think ultimately, you're not going to hold. This rally is just a counter trend rally, but it seems to impress everybody whenever the dollar rallies. But if you go back and look
at the dollar and, for example, its relationship to gold, it is not a very good correlation. The dollar index, after all, is not a measure of dollar as an asset category. It's a measure of that asset category versus other fiat currencies. So it's one pile of this versus another pile of stuff, okay? In real dollar terms, it continues to decay in real value about, supply increases about 90% every 10 years.
Yeah.
So, its buying power gets almost cut in half every decade. Well, if you go back to the dollar index on a monthly, back to the 2015, for example, December of 2015, the price of the dollar then was about 97, 98 level in December of 2015. That happened to be when gold made its low, okay?
Yeah.
Okay, so we're at the same price level right now that we were a decade ago in the dollar. That's what it says. Well, is gold at the same price level it was 10 years ago? No, it's more than tripled. Okay, so the dollar effectively going sideways for a decade. You think, well, gold must have gone sideways. No, the dollar index is merely measured versus the euro and the yen primarily, and it's one piece of junk versus another, and I really don't quite know its value. Except in global exchange. But in terms of holding value or pricing things, it's really illusory, okay? In fact, it causes deception in markets because people think, oh, my stock market went up nicely. And, if you go back to 2000, let's go back 25 years, for example, to July of 2000. And if you look at the S&P and where it was close of this 3.3 times where it was, it's more than tripled. Okay.
Yeah.
Gold is more than 11 folded in that same 25-year period. So what holds its real value? S&P doesn't. And then when you measure it versus the decay in the dollar, it barely keeps up with it. The topping of the stock market, U.S. market now, and I think it's completing its top now. So again, a broadening pattern, is going to precipitate all kinds of panics and asset movements from here to there. And normally, when people move money out of the stock market, 2000, 2002, 2007, 2009, they move it into two categories, T-bonds and gold. T-bonds have not worked. They're dead comatose. It has not participated with gold as an alternative. Now, maybe it will. It's trying to rally today, but it's still, even its rally today puts it in the bottom clump of the last 2 years of action in the T-bonds. Yeah, what do you got there? T-bond futures? Yeah. You go back to late 2022 and we're below where we were then. Okay, so yields have not come down. Price has not really rallied. You've had multiple futile rallies since that 2022 low, but they can't seem to get off the bottom. And this, of course, is indicative of the fundamental crisis that's facing the T-bond market. Something the Fed can't ignore, even though it's not in their mandates. This market's sick. Now, the question is, will a stock market break now actually spark, finally, an upside in T-bonds? We'll see. Because I suspect over the next month or so, you're going to get the weakness in the stock market. And if the T-bonds still don't reply, then you're down to one real alternative. Sheer upset, emotion. Already you've had academics, even some who favor the notion of a central bank, have been saying, especially over the last 6 months or so, hey, they're behind the curve. So even they don't like what's going on inside this Fed. So there's always this, even though they're on the side of the concept of the Fed, they don't like how it's running. Well, if all of a sudden you head down in the stock market in a big way, I don't mean you have to crash, and you get negative data points from hell, because we've got a bubble from hell. Somebody's going to sit back and say, you know what, this has been going on for 100 years now since the Fed was created. And they create these monetary booms and busts, and where the money supply gooses, rates get artificially cut low, and the stock market follows, and then there's a bust and so forth. This isn't working. And so even though they may not have an answer, they realize this isn't what we thought it was. And you got to show the people your cup. It's really good.
Oh, yeah.
Your coffee cup. And explain to them who that was on the, I can't predict that. All I can say is that the move has just begun in terms of the price dynamics, that likely the 10 years of arduous upside we've seen, but continuous upside in gold, silver, et cetera, is now going to go into a more vertical stance because the external technical and fundamental factors are starting to click into gear now, with like this week's action in the S&P, I think starts the process back down, which is not something the investing public expects. The data points go south in a big way. Central banks start pulling their hair. They get divided. Even the Fed is split. We got two. What happens if suddenly there's four? Powell's got to act pretty soon, because if he gets another bad monthly employment report or some other kind of data points that he likes to cite as being true and accurate, which is mistaken anyway, he's going to look political if he doesn't start today. He's going to look like he's game playing, especially if four voices pop up. But the question is, when things don't work and you go into a panic mode, and we remember 2007 to 9, the average American might not have been in the stock market, but boy, it hit them hard, family-wise, home-wise, mortgage payment-wise, etc. It was very painful. And this one is far bigger, this bubble. The errors compounded are far bigger when they become exposed, and you rip the Band-Aid off and people see what's there, and suddenly it's not just the stock market, it's now data points. It's, I got laid off, my wife got laid off, we can't make our mortgage payments, our credit card's canceled, et cetera. I can't pay taxes, can't afford to, So suddenly all kinds of notions like the viability of the IRS as a source of government funding for government goes out the window, and they revert to sales tax. The intellectual support for the Fed goes out the window. Think in a minute, what Lindbergh said. By the way, somebody else said this. My son told me the other day he'd found this quote. Lenin even said, the way to destroy capitalism, there was a free economy, is to have fiat currencies and destroy the currency unit. That's the best way to destroy capitalism. He was dead right. And yet we did it anyway. We should have Lenin quote on the wall of the Federal Reserve building. Anyway, when you face a situation like that and emotion then rises, that's when concepts become doubtful. Questions of, was this really worth it? Is this valid? So forth. I'll give you an example. I'm an anarcho-capitalist philosopher. I wrote a book 50 years ago on it, but Javier Milei just got elected president a year ago in Argentina. It used to be the 7th biggest economy in the world. Now it's a backwater economy. Two parties have been rivaling for power there for decades and decades and turned it into a socialist, stagnant country. Okay. He won the election. He kicked their butts. It's like somebody running against Democrats and Republicans and busting them open. And apparently he's still popular, and he's started to cut major parts of the government out.
Michael's read on the charts is clear. Gold and silver are setting up for something big. If he's right, the move could catch most people off guard, but not the ones paying attention. If you found this update useful, give the video a like, subscribe, and hit the bell so you're ready when the next signal comes in.